On today's episode, we are going to take a quick look at 4 stocks that I'm planning on buying this week. Like most of you, I put money to work in my account every single week. So every single week, I'm either looking for a new investment or an old investment where I want to increase my overall position size. So like always, we're going to take a quick look at recent news, what's happening with the company, a quick look at their fundamentals, and then I'm just going to share my overall thoughts. All right, so let's start off with the first company, and that is Spotify, right? They just reported earnings. This is ticker SPOT. You guys know this company as the audio place, right? They're doing a lot. And we can see from its 52-week high, the stock price has dropped about 37.28%. So you're seeing quite a correction. They just recently reported earnings and things weren't as great as investors wanted them to be. So here they reported their quarter 2 2021 revenue, and they saw 22% total monthly active users growth compared to the same time last year. They saw their premium subscribers grow 20% compared to the same time last year. Their ad-supported monthly active users grew 24%. So year over year, this company did see strong growth in form of users. Total revenue grew about 23%. So it's not a slow company, right? It's one growing at crazy levels, but their monthly active users grew at a slower pace than actually intended. So that's the main reason the stock price took a big hit right now. And that's why we see the stock price dropped a nice amount in the past 5 days, right? So let's take a quick look at the earnings, guys. But if this is your first time here, make sure to hit that subscribe button. My name's Najarro, and I am a stock market investor. Been doing this for multiple years and pretty much just sharing my overall knowledge here. So here in their earnings call, Spotify does mention that the management themselves are disappointed with the monthly active user growth. In the last half of quarter 1, in the first half of quarter 2, they saw really slow down in growth there. The good news they do mention is that they are seeing the trend line reverse. So things are going to start picking back up. They do mention that this shortfall is coming from markets like India, Brazil, and parts of Southeast Asia where they expected a little bit more. So ultimately, they lost about a quarter of growth between quarter 1 and quarter 2. And again, right, this overall negativeness or kind of aspect that management is kind of talking about here, how they're saying that they saw a lower growth than expected, is adding to that bearish sentiment for the company. And I do believe this is one of the main reasons the stock price is down. Regardless, we still see strong revenue growth for the company, and I don't think the audio industry is going anywhere anytime soon. Spotify did mention that they are still released 20 significant new features over the last few months alone, right? So Spotify is continuing to develop. They did stuff like live audio experience with Spotify Green Room. They also started doing paid podcast subscription, and they're continuing to develop new products to have for their users. So overall, Spotify is probably one of my favorite music platforms that I use right now. So right now, most of the revenue for Spotify comes from one segment, and that is its premium subscribers. Now, ad supports is starting to make up almost more than 10% of the company's total revenue. Back in the day, this wasn't really the case. Now it's becoming so. Advertisement is becoming a big player for Spotify now as they are increasing their users. I do believe this is going to continue to be a great player. And they do mention this, that podcast revenue, for example, was up over 627% year over year. The overall going forward, they expect ads to grow to be a substantial part of the revenue mix. So Spotify easily makes the list for me for the first stocks to buy this week. And so now let's take a quick look at the second stock. But before we go there, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. Also, don't forget to hit that subscribe button if you guys are enjoying the content. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So the second stock I want to talk about is probably one that I might get some nonsense or some hate for, and this is Tencent. So right now, the overall Chinese market is taking a huge hit, right? We're seeing a lot of regulations coming out from China that is really driving some of these stock prices down. So first off, we can see Tencent from its 52-week high, the stock is down 38.2%. It definitely saw a nice roundup from that bottom, up almost 10%, but we can see it's still down a nice amount. So for those not familiar, right, Tencent, China right now is kind of doing a lot of regulations with some of their, pretty much the digital market, some of their digital companies. They've done like security stuff that kind of prevented some companies from even registering new users. So a lot of big tech names have kind of taken a hit. A lot of Chinese stocks have taken a hit. So one thing, I do own Chinese stocks, and Chinese stocks are definitely not for everybody. For me, I understand the huge risk that comes with them, and for that reasons, I limit my exposure, and I believe that's the best play for me to play it. If I want to enter in Chinese stocks, limit my exposure, so like that, I'm not overexposed to the Chinese market, but I'm still willing to invest. So Tencent, for those that are not familiar, they do report earnings on August 18th, so about 3 weeks from now. Tencent, they have pretty much 4 main markets. They have the fintech and business services, which makes up about 28% in the last 12 months. When their most recent earnings, which were I think 2-3 months ago, online advertising makes up 17%. 32% is made up by video games, and 22% is made up by social platforms. So we can see they're definitely hitting a lot of markets. My favorite market that they're hitting is obviously the gaming market, right? And the advertisement market. So this is a very, in my opinion, a strong company. Tencent owns a lot of different businesses, or they are invested in a lot of different businesses. And this is why I believe Tencent has taken quite a hit, because maybe one of their businesses might be affected with the overall crackdown, right? I don't think every single business, but there is a potential that some might get hit. But that's okay with me, right? I understand the risk. Even with that, I still don't mind having exposure in this company. They hit everything from movies, music, sports, esports, games, novels, comics and animes, drama series, and variety of shows. So they're a huge player in the digital content service. One of my favorite things, like I mentioned, is the gaming. They own companies like, they own Riot Games, right? Supercell, publicly owned companies. They own a good portion in them. Here we can see a few of them. Again, some of you guys might have not known them. And then they have partnerships with some other external studios as well. So overall, Tencent is a huge powerhouse for the gaming world. Tencent on July 19th of 2021, so about 2 weeks ago, say they are buying a UK video game developer studio, Sumo Group. The third stock we are going to take a look at is Digital Turbine. And some of these stocks I've talked about numerous times, and it's just, we're going to take a quick look at technicals. I believe this is the time for me to keep adding, right? Like I said, I'm not a super millionaire just yet. So right now I have to increase my exposure over time, dollar cost average. And I try to look at companies that I believe are sitting at great prices. I think Digital Turbine is one for me. So this is in the adtech business. Recently, they have acquired a nice amount of companies. They've done a few acquisitions, and it's really pushing this company into new levels. They also have partners with a lot of great industries in just the gaming and ad space, in the social platform. So overall, super excited about Digital Turbine. Right now, the stock price is sitting at $62.95. We can see from its 52-week high closing, the stock is down roughly 33.55%. It's seen quite a correction, but it's done amazing for the year. So some recent news: on July 29th of 2021, Digital Turbine and TikTok announced comprehensive expansion of its app distribution partnerships to North America. So Digital Turbine is to be the preferred distributor for TikTok on mobile devices, preloaded inventory in North America, expanding its current Latin America partnerships. So TikTok has been working with Digital Turbine, we can see in Latin America. They like what they're doing there, so now they're expanding into North America. TikTok will manage their mobile preloads through Digital Turbine's platform, with TikTok becoming the preferred short-form video platform preloaded on Digital Turbine's inventory. So this is a great move, obviously, for TikTok. More eyes on them when people buy mobile devices, but great news for Digital Turbine because this is a huge social media platform right now. Again, this is a very small company for those not familiar. Apps is a small market cap of about $5.87 billion. They are expected to do earnings on August 9th of 2021. So I believe that's 2 weeks from now, and I'm definitely going to be covering them. The fourth stock I'm going to take a quick look at is Fastly. So Fastly, if you are not familiar with Fastly, they are a CDN company. So they pretty much make the internet fast. That's the easiest way to explain it. You know, if you applications, if you're going to application, if you're going to a website, you know how you hate loading times or how you hate when there's a circle waiting for a response. Fastly makes sure you don't have that, right? If you're dealing with an application, you don't want to take time every time you click a button. You don't want to wait for a load. You want it to happen almost instantaneously when you're doing some form of online mobile application, when you're looking at an online website. So Fastly helps out with that. Plenty of customers right now. Fastly's stock price is down a nice amount, right? From its 52-week highs closing, the stock price is down about 62.7%. Again, I really like looking at companies when they have taken quite a correction, and I'm still bullish in them. I think Fastly might be providing a great buying opportunity for me this week. So Fastly, they do report earnings on August 4th of 2021. So that is this upcoming Thursday, I believe. Let's take a quick look. No, upcoming Wednesday. So I'll probably be taking a look at them. So Fastly is expanding. They recently done a few acquisitions to kind of really move a little bit more into like the security type world. So they are expanding that. They talk a little bit about it in July 28th of 2021. They are also increasing the availability of their platform for different languages, and this is pretty impressive, right? Because JavaScript is one of the most used language in the world right now for developers, and now Fastly's compute at edge will be able to use on JavaScript. So again, it's Fastly is definitely moving in the right directions. It's making sure it has the right developers using its platforms. The final thing I want to talk about Fastly, on June 29th of 2021, they did appoint a new CFO. And I want to say this is probably one of the biggest yellow flags for Fastly right now, is the overall changes in management right now. So something still good. It does seem like Ron Kislin has a great backlog of experience. But still, it's something to keep in mind of. So now let's take a quick look at technicals. Let's just see how all these stocks are at. Let's start off with Spotify. So Spotify right now, like I mentioned, taking quite a hit after earnings. I do want to say it's sitting at very attractive levels. Same with Tencent. Tencent, I mean, the overall news right now with China has given me buying opportunities for this upcoming week. Fastly, same. It's taken quite a correction, sitting at attractive levels for me, and none of these stocks are overextended at all right now. Digital Turbine, again, not overextended at all. I'm happy with the company's fundamentals. I'm happy with the market they're in. So right now, I do believe they are giving me great buying opportunities. Again, this is not advice. The final thing I want to take a look at is a few financial metrics. So I'm here taking a look at forward price to sales ratio. First, Fastly right now is sitting at 11.49. I mean, this is where more software companies tend to be. So I'm happy buying at these levels, right? A lot cheaper than it was in most of the second half of 2020 and early 2021. Spotify sitting at about 3.2, again, cheaper than where it was in most of late of 2020. So again, not the cheapest it's been, but I do believe it's sitting at more attractive levels right now. Same with Digital Turbine. So that's it for today's episode, guys. Take care, have a good night, and see you next time.